Welcome to today's market analysis for September 24th, 2025. Prepare for a roller coaster. Ride as we dive into the candlestick signals shaping today's trading landscape. I'm your expert analyst, and we're about to unpack some serious market action. Our market snapshot reveals a day of heightened volatility and mixed signals across major indices. High wave and doji candlesticks dominated the scene, signaling investor indecision and potential trend reversals. We've been closely monitoring 15-minute and daily charts to capture both real-time market pulse and in-day context. Let's break down the candlestick structures we're seeing. Across sectors, we've observed a proliferation of doji, hanging man, bullish engulfing, and hammer formations. These aren't just random patterns. They're retelling us a story about market sentiment and potential future moves. Doji and near doji candlesticks appeared in over 430 stocks today, screaming uncertainty and hinting at impending directional shifts. We're talking about those little crosses on your charts that show opening and closing prices at nearly the same level. When you see these, folks, it's time to pay attention because the market is at a crossroads. Hanging man and shooting star formations were particularly prevalent in mid-cap and large-cap growth sectors. We counted a whopping 468 instances of hanging man patterns. Now, if you're in an uptrend and you see these, it's like a yellow caution light flashing. It doesn't mean sell everything, but it does mean watch your step. On the flip side, bullish engulfing patterns showed up in 150 stocks, primarily in value-driven and cyclical names early in the session. This is a positive sign for these areas, suggesting potential reversal strength for the day. Now, let's dive into the technical interpretation of these patterns. The high count of topping tails and doji stars we're seeing points to a volatile, reversal-prone environment. We're using both daily and 15-minute candles as our reference points for intraday and positional trading strategies. Those bullish engulfing and hammer patterns we mentioned, they're underpinning sector rallies in some undervalued pockets of the market. Keep an eye on select industrials and energy stocks. There might be some opportunities there. However, it's not all sunshine and roses. We're seeing repeated appearances of hanging men and bearish engulfing patterns in high capitalization tech stocks. This is sending up some serious caution flags and suggests a short-term bearish outlook for these potentially overvalued segments. Let's break this down by sector and industry. In the technology sector, we're seeing a lot of hanging man patterns to 152 be exact. This is primarily in large-cap stocks, which are looking overvalued at the moment. The bearish bias here is strong, and we're seeing these signals on both daily and 15-minute charts. Healthcare is giving us a different story. We've got 120 doji patterns showing up, mostly in large-cap stocks. This sector seems to be fairly valued right now, and the sentiment is neutral. Again, we're seeing these patterns on both daily and 15-minute timeframes. The industrial sector is showing some promise with 80 bullish engulfing patterns, primarily in mid-cap stocks. This sector is looking undervalued, and the bullish bias is clear. These signals are appearing on both daily and 15-minute charts, giving us confidence in the trend. Energy is another sector to watch. We've got 50 hammer patterns showing up, mostly in large-cap stocks. Like industrials, energy is looking undervalued, and the sentiment is bullish. These patterns are visible on both daily and 15-minute charts. Lastly, let's look at financials. We're seeing 70 bearish engulfing patterns, primarily in large-cap stocks. This sector is looking overvalued, and the bearish bias is strong. As with the other sectors, these signals are appearing on both daily and 15-minute timeframes. Now, let's talk sentiment and outlook. In the short term, we're seeing a cautious sentiment across large-cap technology stocks. There's growing evidence of bearish reversals in this space, so tread carefully if you're invested here. On the flip side, sectors showing a concentration of bullish signals, notably industrials and energy, are seeing rotation into undervalued names. This could present some interesting opportunities for savvy investors. The short-duration candlestick signals we're seeing suggest there might be some intraday opportunities to capitalize on. While the daily patterns are setting the stage for potential swing trades, let's summarize what we've seen today in a quick rundown. In technology, hanging man is the most frequent pattern. We've got 30 bullish signals versus 120 bearish signals. This sector is looking overvalued to the tune of $2.5 trillion. Healthcare is showing mostly doji patterns, with 65 bullish signals and 55 bearish signals. We're seeing about $350 billion in undervalued cap and $420 billion in overvalued cap. Industrials are looking good with bullish engulfing as the most frequent pattern. There are 78 bullish signals versus 22 bearish signals and about $800 billion in undervalued cap. Energy is showing hammer patterns most frequently, with 40 bullish signals and 10 bearish signals. We're looking at about $700 billion in undervalued cap here. There are 20 bullish signals versus 50 bearish signals, and about $1.1 trillion in overvalued cap. To wrap things up, today's candlestick analysis for September 24, 2025, highlights a crucial pivot in broad market sentiment. Technology and financials are facing overvaluation risks, with multiple bearish patterns on daily and intraday charts. On the other hand, undervalued industrial and energy sectors are showing robust bullish signals by capitalization. The most common patterns we've seen today, doji hanging man and bullish engulfing, underscore both opportunity and risk in equal measure. This reinforces the need for duration-based pattern analysis and sector relative valuation perspectives as we look ahead to the next market move. Remember, folks, these patterns aren't guarantees, they're signals. Always do your own research and consider your personal risk tolerance before making any investment decisions. Stay tuned for our next market update, where we'll continue to decode the candlestick signals guiding the market's path. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, and subscribe and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.